Okay, dear students, let's start another, I would say, practice video. I hope it is recording is on. Yes, it is on. Students, in the previous class, we have discussed the first question from the Kaplan of course kit. Finance Act 2025. Okay, fine. Just a minute. Let me just proper the camera. Apologies for the delay. Oh, it's okay. It's fine, I believe. I hope it is okay. So let's go for another question. Question 103 from your kit. ESME is the name. Let's see the requirements. Part A says calculate ESME's income tax liability for the tax year 25-26. So we are required to calculate income tax liability of ESME, the tax year 25-26. You should indicate by use of zero any item which are not taxable or deductible. If something does not require any treatment, then you have to write 0. Part A, 10 marks. Part B, C, we'll read it later on. Let us just focus on part A right now, and we are required to calculate ESME's income tax liability for the tax year 25-26. ESME is employed by HHK PLC. The following information is available for the tax year 2025-26. HHK PLC had a gross salary is 45,000. Previously, we did one question. I think Jason had a very high salary in the previous question, if you recall. Okay, HHK is giving this gentleman, this lady, in fact, ESME, 45,000 pounds salary. During the tax year 25-26, students, we know that tax year 25-26 actually starts from 6 April 2025, ends on 5th April 2026. ESME receives bonus 19,000, which is the first bonus, on 10th April 2025. So definitely 10th April 2025 falls in our relevant tax year. Another bonus is 22,000 on 22nd March 2026. Actually, the second bonus also falls in the relevant tax year. Wow. ESME was contractually entitled to receive bonuses on 31st March 2025 and March 26. Now, this is the problem. Actually, bonus is taxable at the earlier of entitlement date and actual date of receiving it. If you look at the first bonus, actually first bonus date of receipt is 10th April 2025, but entitlement date is earlier than that. Entitlement date is 31st March 2025. So basically, entitlement date of the first bonus falls in the tax year 24-25. And we are working for the tax year 25-26. So that is why first bonus is not taxable in the current tax year 25-26. But second bonus, yes, because 31st March 2026, even leave that. Actually, second bonus is received earlier than the entitlement date. Second bonus was received on 22nd March 2026, which definitely falls in the tax year 25-26, because the tax year 25-26, as I just mentioned earlier also, it starts from 6 April 2025, ends on 5th April 2026. Logically, 22nd March 2026, which is the date of receipt for the second bonus, falls in our relevant tax year. In fact, entitlement date also 31st March 2026 also falls in the relevant tax year for which we are solving the question. But if you ask me, then logically the second bonus is taxable on receipt date, which is earlier than the entitlement date. First bonus is taxable on entitlement date, which is earlier than the receipt date. An entitlement date of the first bonus falls in the previous tax year. That is why we are not taking that here. Okay. Now what? Let's go for the second one. During April 6 April to 31st March 2025, if you count the time period, I think 8 months, April, May, June, July, August, September, October, November, 8 months. ESME was provided with the petrol car. The car has a list price 42,000. Official CO2 emission rate is 173 grams per kilometer. By looking at 173, I can say that this car is having a CO2 percentage 37%. Even it comes more than 37, we have to restrict at 37. But I'll show you the calculation, don't worry at all. We'll start from 17%. ESME was not provided, she was not provided any fuel benefit. Okay. The question is why ESME was not given a car for the whole year. Point number 4 is giving the reason. December 25, ESME purchased her own car. Of course, when someone is having her own car, they don't need a car from employment. She bought it for £20,000 during the period 1st December 25 till April 26. ESME drove 23,000 miles, of which 12,000 miles were for the business journey. So approved mileage allowance we will apply on 12,000. HH PLC reimbursed ESME 5760 for her business journey. If she has received more than the approved mileage allowance, then difference is going to be a taxable benefit, and that taxable benefit will increase ESME's taxable income. If she has received less than approved mileage allowance, then there will be a deductible expense, and deductible expense will reduce ESME's taxable income. Pure and simple. ESME contributed 4% of gross salary, 45,000 into HSK occupational pension scheme. When an employee contributes in occupational pension plan, it is a deductible expense. It reduces your employment income. HSK PLC contributed further 2%. When your employer contributes for you, in occupational pension plan, it is an exempt benefit. Other information, ESME receives a bonus of 6,000, dividend of £6,000, apologies, in the tax year 25-26. From quoted shares, ESME is considering transferring these shares. She's considering to transfer all the shares to her husband, but right now she's not doing it. She's just considering it. Like some of my students, they're just considering, sir, from today we will start studying. They're just considering it, but they're not actually studying. So you're supposed to actually start studying. Andy, name of the husband is Andy. During the tax year 25-26, ESME made a charitable donation, 5,000 net, in the gifted scheme. If you recall, then it's husband information. Student, if you recall the way back, when we started our lectures, just a minute, let me hide this. Oh, if it is, I don't know why it's not happening. Student, if you recall, the way back when we started our FA 25, we did discuss the concept of gifted donation while calculating, if you recall, the ANI, adjusted net income. Whatever you have contributed, it is 80%. We have to gross it up. And by the gross gifted donation, basic and higher rate band will increase. And whatever individual pays, it is 80%, 20% is paid by HMRC. And we are required to calculate ESME's income tax liability. So let's put the heading here. ESME's, let me do one thing. Let's do this. ESME's income tax liability 2025/26. We have got employment income, which is a non-saving income, and we also have dividend income. So let's make 3 columns. Directly we are solving it. So I'm making one column here, make it non-saving income. Non-saving. Okay, let me do this. Non-saving income. And dividend income. One more column, let me take for the total. Okay. Salary. ESME salary is £45,000. Okay. What else? After that, let's go. First bonus does not fall in the relevant tax year. So first bonus, we have to write 0 because something which is not taxable, not deductible, you have to write 0 to get 0.5 marks. Second bonus. Yes, we have to take the amount of the second bonus as student 22,000. Then we have to work on car benefit. After the bonus, if I'm not wrong, we have to work on car benefit. Okay, let me show you the working. Car taxable benefit. Working one. So let's come here. Let me first calculate CO2 percentage. It is 173 grams per kilometer. For 55 grams, we have 17% plus 173 round down to the nearest 5. So 170 minus 55. Let me divide this with 5. Let me just write the bracket, put the bracket here. Whatever comes, it will be a percentage. We are getting 40%. Now, let me just mention. Excuse me. Maximum CO2 percentage is 37. So we have to restrict our percentage to 37. Okay, now we can calculate. Okay. Let me just show you the taxable benefit. What is the list price of the car? Student, list price of the car is 42,000. Okay. List price is 42,000. Multiply by 37%. How many months? Multiply by 8 upon 12. So come here. As I mentioned in the previous class also that whenever you are showing the working, you have to give the reference of the working plus try to create the link, of course, where it is possible. Now we have to work on this approved mileage allowance. If she has received more than that, there's going to be a taxable benefit. If she has received less than that, then deductible expense. So let me just write here, approve mileage allowance working 2. Let's see. How much she has received? Her employer has given her 5. So HHPLC reimburse her 5760. Okay. So HHK PLC reimburse ESME 5760. Now let us deduct according to approve mileage allowance. Let me write here. She should have received, for the first 10,000 miles, she should have received 0.45 pence. After that, 2,000 into 0.25. So she has received she has received more than the approved mileage allowance. When you receive more than the approved mileage allowance, then you will have a taxable benefit. Taxable benefit means this will increase ESME's employment income. 1210. So simply this And this. Okay, now what else? ESME is contributing 4% of gross annual salary to occupational pension plan. When an employee contributes to occupational pension plan, it's a deductible expense. Less ESME's contribution to occupational pension. Okay, let's deduct that. Minus 45,000, 4% of that. Employer's contribution is an exempt benefit, but you have to show it. HHK PLC's contribution to occupational pension. I'm mentioning here exempt benefit, but you have to write 0 also. Okay, then we have got a dividend income. So here comes the total, I would say, taxable income or total employment income. Again, as I mentioned in the previous class also, we'll be using all those shortcuts which are available in exam. There's no need to use any other shortcut which is not available. Then there's no benefit. Okay, this is total employment income. I'm just writing the dividend directly here, which is 6,000. Now let's go for the total. This plus this. Now let us deduct personal allowance. Of course, personal allowance is first deducted from the non-saving income, 12,570. Okay. That will give us taxable income. Here comes the taxable income. Okay. This is a taxable income. Okay, now, of course, first we have to apply the income tax rate on non-saving income. Then I would have used the tax rate on saving income, which is not in this question. So obviously, then we'll go for dividend income. And for dividend income, student, if you recall, every individual, irrespective of their tax paying status, every individual gets nil rate band of £500 for the dividend income. Okay. Let us go for income tax. Basic rate. Now this is going to be important. The student basic rate band is 37,700, but this basic rate band will increase by gross gifted donation. It is mentioned in the question. Other information, second point, that net gifted donation is £5,000. So let's gross it up. 5,000 multiplied by 100 divided by 80. So this is the basic rate, 4395. So on this, we will apply 20%. Now let's go for higher rate. Non-saving income which falls in higher rate band, applicable income tax rate is 40%, 64,200 minus. This is what falls in the higher rate band. Okay. Dividend nil rate band. Every individual gets nil rate band of £500 irrespective of their uh, status. Okay. Obviously, the remaining dividend income falls in high rate band where applicable rate is 33.75%. Let me just write for you dividend income. We will take 6,000 minus this. Applicable rate is 33.775%. So here comes ESME's income tax liability. Again, I'm using the sum formula. I'm getting 18746 point. Let us recheck if there is any correction needed. Let me go for the calculation 5760. If there is anything, just a minute, just a minute. Just a minute, just a minute. Let's recheck once. Okay, students, if you come here, approve mileage allowance. I think here we made one mathematical error. Yes, here's a mathematical error. If you look at this 2000, we multiply this with 0.025. We should have multiplied this with 0.25. This mistake was made deliberately. Why? I'll show you. The benefit when I'm solving the question on a spreadsheet, if I make one mistake, when I correct that, then what happens? See the magic. This is corrected. From 1210, it has become 760. Automatically, just keep watching. Just keep watching. Automatically, they corrected my non-saving income. They corrected my income tax liability as well. How it was possible? It was just possible because I did not only show the workings, I made the link as well. Of course, if the link was missing, then this was not possible. That is why, student, if you recall, I did mention many times, you have to show the working. Plus, if possible, try to create the link. This is the benefit of the link. That instead of writing 0.25, we wrote 0.025. Obviously, whatever, it was an error. Then we just corrected it and automatically everything was corrected by itself just because of the link. Okay. This is all about part A. Oh, no, just a minute. Something is wrong. Okay, fine, I believe. Yes. Now part B. Explain how married couple can reduce their income tax liability for the tax year 25-25 by claiming the transferable amount of. Actually, married couple can reduce their income tax liability by transferring the personal allowance 1260 multiplied by 20%, 252, and state why such a claim is not possible for ESME and ND. Actually, you can reduce your income tax liability by marriage allowance, which is 1260 multiplied by 20%. By 252, your income tax liability will reduce. It is not possible here because for getting that marriage allowance relief, both husband and wife, both will have to be basic rate taxpayer. ND is a basic rate taxpayer, but ESME is earning more than that. ESME is a high rate taxpayer. So since ESME is a high rate taxpayer, that is why it is not possible. So this is what you need to write. I'll show you the answer as well. First line is what you need to write. I'm not typing it just to save the time. First line which you have to write that one spouse can transfer 1260 of his personal allowance to another spouse. Logically, ESME should transfer 1260 to her husband. By doing this, income tax liability will be reduced by 1260 multiplied by 20%, which is 252. Okay. Then you will be mentioning in the next point that here marriage allowance relief is not possible because to get marriage allowance relief, husband and wife both will have to be basic rate taxpayer, and here ESME is a high rate taxpayer. That is why it is not possible. Now in part C, what they are saying? Explain how both ESME's income tax liability and ND's income tax liability for the tax year 25, 26, 27 next year would be affected if they were to transfer all the quoted shares currently held by ESME to ND. Okay, you are not expected to there's no need to calculate there's no need to recalculate incomes ESME's income tax liability. You should assume everything is same. Now let me explain part C quickly to you. Actually, ESME's husband is having income of 7,000. If ESME transfer all of her shares to her husband, then the dividend income which she gets every year, £6,000, husband will get the £6,000 income. So ND's total income becomes 13,000. ND will deduct personal allowance 12,570. Taxable income of ND will be 430. And obviously this taxable income 430 of ND's income will be from the dividend income, and entire 430 is covered in the nil rate band. Logically, ND will not be paying any income tax. We repeat, if ESME transfers all her shares to ND, then in the tax year 26-27, ND's total income will become 13,000 minus the personal allowance taxable income will be 430, and that 430 will be covered in dividend nil rate band, because we know that we have to apply income tax rate on dividend at the end. So 430 is covered by the nil rate band. So logically, ND will not be paying any income tax. On the other hand, ESME will get the benefit also, because if ESME does not transfer all her share to ND, then what happens? Then obviously first 500 ESME will also get a nil rate band, but on remaining 5,500 ESME will have to pay 33.75%, which is actually coming 1,856. Now logically, by transferring, if ESME transfers all her shares to ND, logically this couple will save, and specifically more to be more specific, ESME will save her income tax liability of 1,856, which you can see in the part A. On 5,500, she is paying 1,856. Forget that 0.25. So what you have to explain in part C, let me repeat again, just to save the time. You have to write what I'm explaining you. That when ESME transfers all her shares to ND, then ND's total income will become 13,000. From then 13, ND will deduct the personal allowance 12,570. Remaining 430 will be covered in dividend nil rate band, which means that ND will not be paying any income tax. On the other hand, ESME will be actually saving 1,856 on her income tax liability, because if she does not transfer all her shares to ND, she will be paying 1,856. If she transfers, she will not be paying 1,856. It means she will save 1,856. Let me also share the answer of this question. I hope we have the answer as well. Yes, it's here. So student, here is the discussion of part B and part C. And I hope part A is also there. Yes, part A is also there. So I'm also on the portal, you will see the answer as well. So students, that is all about one more question from the Kaplan kit, which you have seen that. Again, I'm telling you one thing. Whenever you are solving a question on the spreadsheet Excel, whenever the working is required, you have to give the number plus try to create the link. Like here, we created the link and we got the benefit. Just there was a mistake of 0.025, and when we corrected, we changed that 0.025 to 0.25. Rest everything was corrected by itself. So that is all about today's class. And as soon I would recommend immediately, kindly after this class, immediately try to solve the entire question once again. And also part B and C. I have to explain you each and everything. Again, if you have any question, you can always ask in your relevant WhatsApp groups. Thank you very much. And again, in the coming few classes, again, we'll be practicing. There will be more practice videos on the topics which we have studied. And then, of course, we'll start a very important a new brand topic, which is self-employment. I hope the video is being recording is done. Okay, thank you.